Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, December 6th. All right, guys. Well, we had the Italian referendum vote, which was a no, which is actually very bad. That makes banks and the political system in Italy very unstable. And yet the markets rallied again. We talked about this yesterday morning when in the pre-market we were up about 10 handles. So what happens is we gapped up and we pretty much went nowhere. We had 1.2, just under $1.2 billion for sale, market on close. So if you don't think the institutions, the money managers, now I'm not talking mutual funds now because they just pretty much buy, are selling into any type of rally, think again. This is a repetitive pattern that happens, that every time when the markets try to sell off, they come back and they start buying the dip, like the Brexit vote. We had the EU referendum, obviously. We have Italy that just happened on Sunday. You can see it on a daily chart, and that is absolutely computerized trading, because there's no fear, there's no greed, and they just keep buying the dip until it doesn't work. Well, at one point in time, the markets are going to roll over a little bit too far lower than expected, and that buying the dip mentality is not going to happen anymore, and they're going to start abandoning that style of trading and start reversing and start selling into any rallies and start really pushing the markets around. That's going to happen, guys. It's only a matter of when. So we have to be very careful and be alert in our trading. And even when you're day trading, you have to be alert. Why? Well, you could be in a position in the middle of the day and something just freaky just happens to the market and the market sell off. Remember, risk off happens extremely fast. You can't even blink an eye and you're down big money. And I mean big money. So you have to know what's going on around you. There's a lot of crazy things that are going out there as of right now. Do we get a big sell-off? Not sure. No one knows. I will tell you that we start coming into seasonality weakness starting today and going into around the 15th to the 18th of December for tax loss selling. Does it happen? Doesn't have to. Donald Trump's talking about tax reform, so maybe people don't sell. People, meaning traders, investors, don't sell their losses and then or take the loss now and they wait till 2017. That could happen. So whatever you expect to happen doesn't happen in this crazy market. So we have to be very careful and be alert of our surroundings. Okay. The good thing about day trading is you're not taking any overnight risk. Because there's huge an abundance of overnight risk out there, guys. I mean, tons of overnight risk. You just don't know about it. I mean, there's a lot of things brewing that we all don't know about, that the government, central banks around the world try to keep it hush-hush. You know, we talk about the Deutsche Bank debacle back in June and July. What happened to that? All of a sudden, it's out of the cards, out of the limelight, because there's probably a deal made between certain parties, and they keep it hush-hush so they don't rattle the markets. It's really what comes down to it. And it's just a very bad type of a market, very manipulated market by the Federal Reserve and also by a lot of central banks around the world trying to devalue their own currency. So you have these currency wars that go on. It's just a lot of stuff. We can go on and on. So what I'm going to focus on is gold. We talked about crude oil yesterday, so I'm going to go back to gold today. And I do think that crude oil, make one quick comment. You're not going to see much more upside in crude oil unless obviously there's some sort of news that comes out. But, I think you get to 52, 55, even 58, for a capitulatory high. And I think after that, the markets start to digest and start realizing that there's so much oil out there, even with a production cut or freeze, it's really not going to help anything. I see oil valued, fair value oil is probably $35, okay, without the premium that's been induced into the oil markets by the OPEC and OPEC non-members based on the Vienna meeting, okay, back in November 30th. So just, again, trade what you see, but don't fall in love with your position, especially now at this time of year until the market officially starts to correct itself. Dollar. Let's get right to it, guys. We have the dollar here. We did fill one little gap. We have a nice big gap area here. And again, I don't have a problem with the dollar rolling back down again. I think the dollar is here to stay, and I think the dollar should rally back up and take out these highs here. Okay, but right now it's starting to roll over, so we are getting some bearish patterns, and we are getting some deep pullbacks here. Okay, so this could actually either stop, which it did stop yesterday on this gap area of support, The next area would be that 25.60. All right, and that's going to be the UUP. Remember, why do you need to watch dollar? Because it does affect its commodities and even equities at one point. Next is going to be the GLD, and let me just get rid of this. We did hit our objective 2 targets here. Right, we'll get rid of that, and again, the next is going to be the 61.8% retracement. I think you see it, guys. I just think it's inevitable. We had a breakaway gap, as you can see here, and then we just continue to go lower. We are getting oversold. We have no positive divergence at the moment, but looking to form some type of divergence. So if we break down today and we sell off pretty hard, then I think you can get to that 106, 108 area. That'll get you that area here. Now, why am I interested in that? Well, that's really going to be, believe it or not, guys, I know this is a very bearish type, rounding top here that we sold off, and then now we're back down to this area. But that should put a higher low from this previous 2016, beginning of 2016 low. So I am looking for higher prices in gold, but not yet. I'm still looking for one more capitulatory low, another base building, and then take out that base high. Okay, that swing high, and then we start to roll. But if you're going to look to trade it for the day, that's one thing, but I wouldn't start nibbling in just yet. Okay, I need to see a little bit more evidence. That's GLD. GDX, same thing, doing a little bit better, holding up. But when gold goes, so does GDX, and that GDX will sell off harder than gold. Okay, so again, looking for this area to hold right around the $18 number. If we lose 18, we could probably get down to $16, $15.5, $16 here. We got that thin zone that we were talking about. Again, no positive divergence as of yet, but the MACD and RSI are looking a little bit better than the GLD, which is the gold. Now, I want to talk about spiders. Yesterday, we had that move, that pretty much that gap up, and on the charts looks great, and everybody's we're going to new highs, and we could, but keep things in perspective. And this is why sometimes you need to look at higher time frame charts to see what really happens. Everybody says, outside day reversal, and yes, on a daily chart there is an outside day reversal, and we could go higher today yet again. But remember, we're still consolidating here. This is a weekly chart of the spiders. Okay, we're still consolidating in this area, so there's really no change other than what happened here. We never took out a pivot low here for a bearish move lower, right? Or take out that pivot high here. Okay, so that is what we're looking for. That's something that I'm going to be watching for the coming days, and you can just put yourself a spot right there, and then just really say 221.90 is going to 221. Call it 222. Really needs to get taken out on a closing basis for prices to move higher. Right now, we're just consolidating on a weekly chart. Okay, just wanted to show that to you guys because there's a lot of people out there who think that they're master technicians when they're really not. And although this looks great, outside day reversal off of a Friday doji, there's really not much to write home about yet. We're still in the consolidation. You can see that here. Okay, that's on a daily chart. Downside targets still remain the same. Okay, and you can see here that we're curling back up into an overbought state. So we're still in an overbought state. We only had a couple of down days. And so just, be aware of you're trading a fairly valued market. 60-minute, do have a little positive divergence here that has formed, but we do have that gap area. Now we have a new gap area that needs to be filled, and we're going to put that right there. All right, that's going to be that gap area that needs to get filled, whether it be today, tomorrow, in order for us to have prices to go down. To have the lower prices, this is the area here, 219.15 really needs to get taken out for that gap, that other gap fill area. Remember, guys, gaps eventually do get filled, and there's a nice big long gap here. That's a Donald Trump election. Okay, that eventually will happen. Next is going to be the IWM. And it's just insane. It's crazy because I love the IWM. I think the Russell 2000 small caps will do well under the Donald Trump administration. However, you're up 13-12% in less than 2 weeks of trading. That's just insane. And why would somebody buy IWM back up in here again? And remember, guys, we have very low volume. We have Christmas time, the trading holiday trade. All right, and it tends to be one-sided. So I would use caution here. I would not be looking to buy Russell 2000 up at these all-time highs here. We have a gap area here, coincides nicely with a 38% retracement, which also coincides nicely with our proprietary price channels, okay, and our uptrend line here. So that's going to be the first target, and then we would reevaluate IWM. And last is going to be your Qs. Okay, you can see here Qs really didn't do too much. Money coming out of the technology sector, rotating into some high yielding interest sensitive plays. So just keep that in mind, and we will see you tomorrow. Remember, guys, tax selling starts about today and ends around the 18th of December.